All right, we're going to go ahead and get started. I know your time is valuable, so I want to go ahead and get started as quickly as we can. We do have a lot to cover in this window. I'm going to try to cover it as quickly as I can, give you guys the information that you really need to know, and then we'll record this webinar. It'll be posted to the YouTube channel later this week, so you can always check that out. The presentation, the tax law updates presentation, will be available on the support site under Keep It Simple Documents. So you guys will be able to access those probably by the end of the week. We'll have all of that stuff done. So this is the most current tax law information that I have available. That doesn't mean that these things won't change, obviously. The IRS and Congress is consistently making adjustments, making changes in the month of December. So as anything changes, we will let you guys know. I will ask you in this presentation to go ahead and hold your questions until the end of each section. So we will do tax law updates, and then we'll actually get into the software, look at a couple of setup things, as well as go through a return in direct input mode so that you guys can see how that process works. Talk about the software features that you guys can utilize this year. So we'll go ahead and get started. What we're covering today, we're going to cover the child tax credit and advanced child tax credit reconciliation. We're going to cover the changes to child and dependent care credits, a couple of slight changes to earned income credit, as well as the recovery rebate credit, taxpayer authentication, and then a few other things that you need to know, a couple of changes to the 1040 forms, things like that. So let's start here with child tax credit and the advanced child tax credit. So for 2021, the child tax credit is fully refundable. Previously, there was a non-refundable piece, and then there was a refundable piece. Now it is fully refundable. The credit amount is increased to $3,000 per child ages 6 through 17, and $3,600 per child under age 6. So eligible children are those who are under age 18 now versus under 17 previously. These changes apply to all taxpayers who had their main home in the United States for more than half of the year. So as long as they were stateside for at least 6 months, then these rules apply to them. If they were not, if their main home was outside of the US for more than half the year, then the old child tax credit rules apply. So at that point, they'd have a non-refundable and a refundable piece, and the credit amounts are limited as well. So child tax credit will phase out. There are 2 phase outs. The first phase out, the credit's reduced down to $2,000 for filers when the AGI reaches $75,000 for single, $150 for married filing joint, and $112,500 for head of household. Now the second phase out is related to the remaining $2,000. Okay, and that will be reduced based on the AGI, and will reach 0 when the AGI is over $400,000 for married filing joint, and then $200,000 for everyone else. Now, we all know that the IRS started distributing payments monthly in July. So July through December, they were sending eligible taxpayers monthly payments as an advance on their child tax credit. The monthly payments were $250 for each child between 6 and 17, and $300 for each child under 6. The calculation for this was based on either their taxpayers' 2020 return or their 2019 return. So there could be a circumstance in which they got more than they should have gotten, and there is the expectation for them to pay that back as long as they don't meet the safe harbor protections. If they're outside of that scope, and we'll talk about that in just a minute. So they created the IRS Child Tax Credit Update Portal, which I call CT Cup. CT Cup allowed them to opt out of the advances, re-enroll, change bank account information, filing status, addresses, marital status, things like that. But the two most important pieces for us are see history of payments, the amounts of each payment, and how each payment was distributed, and whether it was calculated off of 2020 or 2019. You may need that information to explain to a taxpayer why the amounts are different than they expected, or why they got more than they should have. So the reconciliation is going to be done on Form 8812 Part 1B. The result of the reconciliation is going to be one of two things. Either the calculated credit is greater than the advance payments, which means they'll get a refundable credit, or the total of the advance payments were greater than the calculated credit, and they'll have an additional tax. Now, how can they find out what they've received in 2021? The IRS is going to be mailing letter 6419 in January. It's going to look very similar to the letter for the recovery rebate credit that went out last year. The letter will include the total amount received and the number of qualifying children used to calculate the payment. This is crucial. If the taxpayer loses the letter or doesn't get it, whatever the case is, they can access that information for the child tax credit update portal or their individual IRS online account, which will have a link to the CT Cup. Okay. And we're going to talk more about the authentication process for your clients to actually get set up in either the portal or basically set up their IRS account. I encourage you, even now, we're going to talk about it again. I encourage you to get your clients to do this. I would be very, very cautious in filing any return where you don't have documentation of some kind of how much they received in the advanced child tax credit. Because the key piece to this is it's not necessarily how much they received, how much physically was in their hand or in their bank account, but how much the IRS sent is the key piece. And if those two numbers don't match, if the number that they tell you they received doesn't match what the IRS says they sent, they're going to kick it into error resolution. And for anyone who is new to this industry, error resolution is where tax returns go to die. They will be there for months on end. I've seen returns that were filed in February not fund until the following year because of something in error resolution. You want to do whatever you can to keep returns out of error resolution. The best way to do that in regards to the advanced child tax credit is to either have that letter or have them log in to the IRS online account and view the amounts. Now, if they say, well, I didn't get that much, they've got to take that up with the IRS. They're not going to be able to reconcile their receipt of that credit on their tax return. That's not going to work. The IRS says they sent X number of dollars. That's how much the IRS sent. Whether it was received or not is another question, and that's something that they would have to take up with the IRS directly. Okay. So they'll use what the IRS is calling the secure access digital identity process to do that. If they have previously had an account, they can authenticate themselves using that. They can always do what's already there. But again, you should definitely encourage your clients that are eligible for this to access their online accounts before filing season. So I spoke earlier about the safe harbor for excess advance payments. So taxpayers will not have to repay an overpayment of up to $2,000 per child if their AGI is below these benchmarks. For single, it's below 40,000, and then they would phase out of the safe harbor between 40 and 80,000. Married filing joint, if the AGI is below 60,000, and the phase outs between 60 and 120,000. Head of household, the AGI is 50,000, phase out between 50 and 100,000. So if their AGI is below those marks and they receive more child tax credit, advanced child tax credit than they were supposed to, at that point, there'd be no expectation for them to make any payment. They wouldn't be required to pay it back. Anyone else whose AGI is over that and they had excess advance payments would be expected at that point to pay up to $2,000 back. Okay. So it is going to be calculated. The child tax credit and other dependent credit are now calculated on the 8812. Previously, it was just used for the additional child tax credit piece. Now it is significantly longer. It is about 3 pages. Most taxpayers will only need to complete page 1. Page 1 calculates the other dependent and then the child tax credit. Page 2 calculates the child tax credit for those people who are not in the US for at least half of the year. And then page 3 calculates any amount that the taxpayer has to pay back due to receiving more advance credit than they were supposed to. So child and dependent care credit, and this is incredibly important to note, fully refundable for tax year 2021 only. At this point, there is no expectation that this credit will be fully refundable for tax year 2022. It's not out of the realm of possibility. It just hasn't even been discussed. So tax year 2021 only, the child and dependent care credit, which is calculated on 2441, is fully refundable. Now, this is where you've got to do a little bit of explaining to your clients, because what they are hearing is $8,000 for one child, $16,000 for 2 children. That's not the credit that they are going to get. That is the maximum amount of expenses they can use to qualify for the credit. Okay, so it's $8,000 for one child. It used to be $3,000, and then the maximum credit is now $4,000, which is fully refundable. It used to be $1,050. The maximum expenses is $16,000 for 2 or more children, was $6,000. The maximum credit now is $8,000. Again, fully refundable. It was $2,100. Now, the credit rate and income limits were also increased. So the way this credit works is if you have one child and you have $8,000 in expenses for childcare, then you qualify for 50% of your expenses as a credit, right? As long as your AGI is under $125,000. Which is going to be probably the overwhelming majority. Now, this AGI is not specific to single or head of household. It is all filing statuses under 125,000. Okay. The credit rate will gradually then decline until it reaches 20% when the AGI reaches $183,000. Okay. That 20% rate then applies for AGIs between $183,000 and $1 and $400,000. That's a typo. The credit completely phases out at $400,000. Once they're over $400,000, they're not going to qualify for this credit at all. This is going to see a substantial increase in a lot of taxpayers, but you want to make sure that you're able to explain this to them, because what they're hearing is $8,000 or $4,000 credit. That doesn't always apply. If they spent $3,000 on childcare, then their credit would only be $1,500. So it's 50% of their total expenses, up to $4,000 if they're for one child and $8,000 for 2 or more children. It is not per child. It is $8,000 for the first child, $8,000 for the second child, and basically nothing after that. That's kind of how it works. So again, we go back to this only applies to taxpayers who have their main home in the United States for more than 6 months. So for those taxpayers that were outside of that, the credit goes back to the old rules and it's non-refundable. Okay. If you want more information, go on the IRS's website to the Child and Dependent Care Tax Credit FAQ page. That's going to get you the best information possible. Okay. Couple of things sort of to note here. There's a new line on the 1040 Schedule 3 Part 2, line 13G, shows the refundable child and dependent care credit. Okay. it used to be a 1040 Schedule 3 Part 1 line 2, and that line is still there, but that only applies to the non-refundable piece. So if you go looking for the credit to make sure that it's calculating correctly, you want to look at the 1040 Schedule 3 Part 2, line 13G. There was a checkbox added to the physical form at the top of the form regarding the qualifications for the credit being refundable. We're going to look at that form when we do return, just so that you guys know how to do this. The key lines for you guys to really know is line 10 shows you the calculated credit if the credit is refundable. Line 11 will show you the calculated credit if it's non-refundable. That will let you know. Okay, so there's been a couple of permanent changes to EIC. One is the maximum amount of investment income is increased to $10,000. It used to be $3,600, I believe. And the second is taxpayers who have children without SSNs are now eligible to claim EITC for taxpayers without dependents. And I'll explain that a little bit more when we get to this next page. So they are extending the prior year earned income election. So last year, taxpayers could use their 2019 earned income for calculating EIC as long as their earned income was greater than 2020. So they've extended that out, but it's important to note that they need to use their 2019 earned income for that election, not their 2020. 2019 earned income can be used to determine earned income credit for tax year 2021 only if it was greater than their 21 earned income. So if 19 was greater than 21, they can use 19. An important thing to note here is in 2021, just like 2020, they must have earned income in 2021 to qualify to use the prior year earned income election. So if they, for example, if in 2021 their only income was unemployment, they would not be able to use this election because unemployment is not earned income. It's passive income. It's unearned income. Okay. So they've adjusted the criteria for individuals wanting to qualify for EIC with no children. The minimum age was lowered from 25 down to 19. The maximum age was eliminated, so taxpayers over 65 can now qualify. The maximum credit is $1,502, and the credit is fully phased out around $21,000. Now, keep in mind that this section only applies to those people who do not have dependents or do not have any qualifying children. So going back to the previous slide, we're talking about taxpayers who have a social and their dependents did not have an ITIN. They qualify for this portion of EIC. They can now qualify for the credit based on individuals who have no qualifying children. So the EIP, I think we're all very familiar with the recovery rebate credit payments. This is just a little information about how that payment was calculated. I'm not going to spend a bunch of time on this slide. The next slide is the more important piece, and that's the reconciliation. So just like last year, the recovery rebate credit has to be reconciled. It'll be reconciled exactly the same way. Most taxpayers should have received the full EIP amount, but the IRS is going to be sending letter 6475 in January to all taxpayers that received an EIP in 2021. It's going to look just like the letter from last year. If they lose that letter or they did not receive that letter, they can access the information by logging into their IRS online account, which is what we're going to talk about next. So the IRS has replaced the secure access process for authentication, which some of you guys may know was very bulky, very difficult to use. You had to have credit cards, you had to have a bunch of different things. you had to have a mortgage or something like that to be able to, access to authenticate yourself so that you could gain access. It is significantly easier this time around with the inclusion of ID Me. So basically, this is how it works. The user will go into the tools and applications section of the IRS, and then they'll open up either the CT Cup or the view your account information. At that point, they'll be able to create a secure account via ID Me. They'll click the create account button. They'll complete their ID proofing authentication. Then they can go back in and get that information. Okay, and I'm going to explain a little bit about what that ID proofing authentication process is, at least as much as the IRS has been willing to share and as much as I know. So they are going to need the following things in order to complete the IRS authentication process. They're going to need a picture ID, a cell phone with the ability to take a photo and upload. They'll need another piece of evidence to prove who they are, car registration, bank statement, utility bill, something like that. Depending on what type they use, they may need to provide 2 or 3 of those forms as evidence, and then they must have an email address. So basically the way this works is when they create their account, they're going to upload a copy of their ID. Government issued is best. Passport, state driver's license, something like that. So they'll upload that, and then they will take the next step would then be taking what amounts to a selfie. They'll take a picture of themselves, and the IRS will use facial recognition software to determine that if the person in the picture is the same as the person on the ID. At that point, once those 2 things have been done, and the IRS authenticates the facial recognition, then they will be asked to provide those other documentation. Again, car registration, utility bill, something like that to prove who they are. The process usually takes about 10 minutes or so. It's not overly complicated. If any of you haven't done it, I recommend you do. We're trying to figure out how we can put either a walkthrough or a video on the support site for this. It's just difficult because you only get one shot. So you have to get it right, and it has to be secure. Is the other side. We don't want any of our staff's personal information, just floating around out there on the internet. So if we can do it in a safe way, we will, but I don't want to make any guarantees on it. All right. So a couple of other things to know. Beginning this filing season, you will be able to electronically file amendments for returns that were paper filed and for taxpayers that are making a filing status change. All right. Second thing in here is we finally got some clarification from the IRS, which is any refund associated with an amended return will come to the taxpayer via check. They will not do direct deposits on amended returns, so they will get a check. There's been a significant amount of discussion about changing this for tax year 2022. All right, so the other thing to know is the COVID or disaster related withdrawal from a retirement account. So last year, the IRS, as part of the COVID relief package, essentially, allowed taxpayers to withdraw money from their retirement account if it was related to COVID or another declared disaster area. And essentially what they would do is they would withdraw the money without penalty, and then spread the tax that's due on that money over 3 years. Well, now this is year 2. It's the first year of sort of the reconciliation or the second piece to it. And so if you have any clients that use that 8915E, just remember that they need to use 8915F for the second and third year payments. So in 21, they'll make the 8915, and then on tax year 2022, they'll use the 8915 for the third and final payment. Self-employed credit for sick and family leave. So the American Rescue Plan Act made the following changes to this credit. It extended it through 9/30 of 2021. It reset the 10-day maximum for sick leave starting at April 1st of 2021. So the original 10-day limit applied 4/1 through 3/31 of 21. Increase the number of days the family leave credit may be claimed. It's now 60, which means the maximum credit is 12,000. So revisiting sort of the general details of this credit, sick leave, for the sick leave piece, self-employed individuals may claim up to 10 days of sick leave if they were unable to perform their services due to having COVID themselves or providing care for someone who had COVID. So the credit for themselves was 511 a day. If caring for another, it was 200 a day. Okay, now family leave is a little bit different. Family leave allowed self-employed individuals to take up to 60 days if they were unable to perform their services because of certain COVID-19 related care they provided for a son or daughter under the age of 18 whose school or place of care was closed for reasons related to COVID-19. Now, this will be a little tricky for those of you who are in Texas. Most of our schools were open by the second semester. There's a few, I'm sure, that were out there. I know the school district here locally, the kids had the option. They could either go to school or they could do remote learning. Now, this is key to this. My understanding from the IRS and having conversations with the IRS is they can only take this family leave credit if the school was actually closed, not if they had the option to attend in person and chose not to. Those are two very different circumstances, right? If the school is closed, then they have to stay home with their kid. If the school is open and they chose to keep their kid at home, they made a choice at that point. It wasn't beyond their control. That's how the IRS at least interpreted it to me when I spoke with them about it. So if you're not sure, check with the IRS. That credit amount is $200 a day. All right. So changes, a couple of changes on the 1040, just things that you guys might see that's different. One is the charitable contributions for standard, for those taxpayers that took the standard deduction versus itemized deduction has been moved from line 10B down to line 12B. The wording on line 19, because of the non-refundable part of the child tax credit and credit for other dependents, that has been reworded, if you will. They added lines for the combat pay election prior year earned income election to line 27. They changed the wording for the refundable child tax credit on line 28. Again, just a couple of changes that you'll see. Made a bunch of changes on schedule 1 and schedule 2 and schedule 3 for that matter. The bulk of these changes, however, are just itemizing things out that used to be in one particular group. For example, line 2A used to be a group, and now it's 2A through 2P. So it's that kind of thing. The piece that I want to point out again is just something that's changed that we have to kind of look in a different place when we're looking for it. And that's the child independent care expense credit. That is on line 13G. Okay, 13G of schedule 3. That's where you'll see the amount of the refundable child independent care expense credit. Okay. The last thing that did not make this presentation, honestly, because no one had thought about it until I had a conversation with the IRS a couple of weeks ago, and that is unemployment. So last year, the IRS, very late in the game, I say IRS, Congress, very late in the game, decided that there was going to be a $10,600 exclusion on unemployment income. That was limited to tax year 2020 only. At this point, there is no exclusion on unemployment for tax year 2021. And quite honestly, just based on my experience, I have no expectation that there will be. When I asked the IRS about it, they said it hasn't been a topic of discussion, which means that they're not talking about it by this point in the year. It's very, very unlikely that it will happen. So there's probably not going to be an exclusion of any kind. So I wanted to sort of point that out to everybody. So what I'm going to do now is I'm going to open this section up for questions. I know someone had sent in a chat earlier. Someone asked if we could get a recording of this. Yes, I discussed that at the beginning of this presentation, and we will post this entire recorded webinar to the Simple Tax Support YouTube channel by the end of this week. We'll have that information up there, and then this presentation, if it's not already up there, it will be there by the end of the week. It'll be under Keep It Simple on the Simple Tax Support website. Go to Keep It Simple and then Keep It Simple Documents, and the presentation will be there. It'll say What's New 2022 probably. So I want to open it up and see if anybody has any questions over the tax law presentation. If you do, you can unmute yourself and ask, or you can throw it in the chat if you're not comfortable, speaking to a group. Okay. So I don't have any questions. No questions have come in. So that's great. If you guys have a question or anything like that, if you think of a question after this, please don't hesitate to, email support. You can email us at support@simpletax.co, and we'll respond as quickly as we can. All right, so we're going to end this slideshow, and we're going to jump into the software. All right, so here is the Keep It Simple online software. So I'm going to kind of touch on some things inside of here. My focus for this particular presentation is going to be focusing on the return piece itself. I'm not going to spend a bunch of time in setup. Setup is extremely easy. You just use this quick account setup button. It will take you through what you need in terms of getting the firm set up, the invoice set up. The invoice setup, I'll do it here because it's really easy. You're just going to create a prefix. I always use the tax season and then the city that I'm located. And then I recommend that you check this box right here where it says check here to show detailed fee disclosure on bank products. Makes it a lot easier to explain the fees when you're looking at the bank application itself. Okay, so we'll do save and close, and then that's the end of it. So I know we have quite a bit of new customers to this product. So I want to explain some of these things that are on this screen. Okay, so this is the dashboard. Everything on here is pretty self-explanatory. The piece I want to focus on is up here at the top. So we have that quick account setup button that I just showed you. We have a live chat button. This live chat button will connect you with Simple Tax Support. So you can live chat from anywhere, in the software. Just hit live chat, enter your name, enter your EFIN, and one of the support reps will respond to you in real time. So there's not a delay typically with that. Remote support, if for whatever reason, a support rep needs to remote into your system and help you with printing a check, whatever it is. You can click remote support up here and then enter the session ID that they give you. And in this name field, you want to enter your EFIN. It just makes it easier for us to track. View text messages. We're going to talk about the texting capabilities that rolled out this year for the software. But this is where you can see a history of the text messages. It's sort of like a quick list view, if you will. Now, for some of you that have been using this software, this is going to be a little bit of a change, but we have found this to be the best way to do this moving forward, and that is this login to prior year button. If you need to do prior year returns, click log into prior year, select the year that you want to go to. It will open up and then create a new return and go through that process there. I know some of you were used to using this prior year return from here. The problem that we ran into with that is the process isn't exactly the same. So we've enabled the ability for you to click log into prior year and actually create new returns that way, so that the process stays the same. If you want to continue to use this, that's fine, you can. The key to it, again, I'm only talking kind of to our renewed people at this point. If you're new, I always recommend just using log into prior year. But for our renewed folks, if you want to continue to use the prior year return, that's fine, you can. Just remember that however you start that return is how you have to finish it. So if you use the prior year return, then you have to use the prior year return. If you log into prior year, then you have to do log into prior year. So the log into prior year is right up here, right next to where it has tax year. You want to click log into prior year. Okay. So I've got a couple of questions I just want to respond to quickly because they're quick. Someone asked, when using prior year, will it still allow us to send for e-signature? No. Remote signature, client portal, and the mobile app are for current year only. They will not apply to prior years. Someone said, can we have the old version open and toggle between both? If you're talking about the previous software that you use, sure, you can bounce between the two. We are in the process, if we haven't done it already, we are in the process of actually helping you guys with conversions. So if you have not booked a conversion yet, I recommend you do, because the cutoff for us to be able to get that done in time for January 1st is 5 days from now. So if you haven't done a conversion yet, or if you're not sure, you can always call into support and we can help you. Okay. Moving along. Those are the things that I want to point out at the very top of this. So we're going to jump over here into clients. So we do new return, and I want to show you guys what the carry forward looks like. Now you have the option, you can do a prior year import, which will import all of your returns from the prior year to the current year, even those that were converted. So if we ran a conversion for you, you can pull all of that, the personal information, dependent information over all at one time, or you can do it one at a time. My recommendation is always one at a time. The reason for that is it's just easier to keep track of what's going on in the current year, but however you decide you want to do it. So when we go through this, did I not put in the right phone number? So let me exit back. Go back here. If you want to do the prior year transfer, it's right here. So you can just select the return that you want and you can import. So you can select one or you can select none. It's entirely up to you. If you do it, any other way, and you'll see here's all the information that carried over from the prior year. If we go look, let me grab a different social here. Let's use, okay. So that's sort of how the import works. If you wanted to do, per return, then this is how it would come up. So you go like this. Conversion is only from the current, for the prior year, in case anybody is wondering about that. Because we are not converting tax return data, we are only converting personal details, address details, and dependent information. There would be no reason for us to convert from any year prior than or any year prior to the prior year, if that makes sense. So you got options here. You can do a simple import, you can do a comprehensive, or you can do a custom. For most people, the simple import typically will do it, but you can always check. You can always look and see, and there's information up here. Simple import will not pull dollar amounts from the W-2, 1099 Schedule C. Comprehensive will. Custom will let you decide what you pull forward and what you don't, in terms of what forms get pulled forward. So we're going to hit continue on this and we'll just get into it. So this is the client manager. Okay, you'll hear that phrase a lot from support. Okay, go to the client manager, click on this. All right, so this is the client manager. Client manager gives you an overview of everything that's kind of going on inside the return, personal information, contact, income summaries, things like that, as well as client payment and e-file. Okay, so again, I know we have quite a few new customers to this product. So let me sort of explain one of the big differences between what you guys were using with the Simple Text 1040 product versus the KISS product. Okay. All tax software does exactly the same thing, right? They all prepare taxes. It's just a different process for each software. That's generally how it works. All right. So in this software, we treat the tax return as its own thing and the payment as its own thing. So they're two separate things versus in that 1040 software, you had the bank application inside the return. Here, the return is one thing and then the bank application is a second thing. And I wish I could show you guys the bank application, but they're not going to be live until January 1st. But I'll show you what the client payment piece looks like. So this is the client manager, right? What I want to do is we're going to jump actually into the return. And I converted a prior year return just because it'll save us a little bit of time and actually having to fill out the return. We can get to the meat and potatoes of what we actually need to be doing here. There are two input modes. Direct input is going to be most similar to those of you that were using Simple Text 1040. If you're very familiar with TurboTax and you like that style, the interview mode may be better for you. So in here, right, you see it pulled all of our information. Now, one of the things that I love about this software is the ability to, it sets your resident state by default based on your address. So if the address is here and it says Texas, then this resident state is going to say Texas. Now, if they have a different resident state, just change it. So let's say I just moved to Texas, in January, this is January now, and I moved from Montana. So if I come down here to the bottom and hit save, it's going to add the state of Montana for me. And I'm going to show you guys that in just a second. If they are going to do a paper check from the IRS, do not put anything into this field here. There is no refund type selector in the software. If they want a direct deposit, you enter direct deposit information. If they don't want a direct deposit, you leave that blank. If they're doing it from the bank, you'll have that option on the bank application to select direct deposit. But generally, I would say if they're not wanting a direct deposit of any kind, if they want a paper check either way, leave those blank. It will save you a headache, saves you time and even having to do it. So we're going to hit save on the personal information sheet. And you'll see that the state of Montana has been added. And if we click revisit here, it's marked as a full year resident. Okay. So now, if we go back to the federal, let's go down to, we're going to have file head of household. Great. We're going to go down to dependent information. So you see, I have a dependent that carried over from the prior year, but we're going to add a new one for the sake of doing it. So we set some things by default in this software, right? We assume that the dependent, if you're claiming the dependent that they live with you for more than 6 months of the year and that they lived with you 12, you don't have to tell us. We assume that. If for any reason that's different, then you make those changes. based on socials and those sorts of things, we are going to determine that they qualify for that they are eligible for child tax credit, or that they qualify for EIC, or that they're a U.S. citizen, right? We can determine those things based on the social security number. The head of household qualifier. So anyone who's filing head of household must have at least one dependent that qualifies them for head of household or qualifying widower. So my advice to you guys is, if they have multiple dependents, check that box on the first one. Won't hurt anything. And in this case, we'll just check it on this one, and that's fine. And that's how that goes, right? So you do want to make sure that you do check that on at least one dependent. All right. So we're going to answer no on whether or not they received health insurance from the marketplace. So we hit save. Oh, I didn't put in a date of birth. So you see here, there's a line for qualifying child and dependent care expenses. I'm going to put that in. Let's do 5,000. That way we get a good idea of what that credit's calculating out at. All right, so you'll see sometimes these warnings inside the software that let you know, hey, you've entered information somewhere, but we need more information. So we're going to click here for the 2441 and go over to that and finish out the information that we need here. So we're going to choose the state, because that can affect your state returns if you have certain states. And now you see the dependent information carried over. Now we just need to add a provider. So we're going to add a provider. And we'll do save. Then we can hit save again. Oh, I need to answer that question. So now you see where we're at, right? It's already starting to calculate things out for us. So going up here, I want to show you the form search. So form search, you can hit home. You can type in a form number. It doesn't matter what you type in. It's going to give you the best search possible for that information. So for those of you that are coming over from the Simple Text 1040, I want to kind of explain it this way. All forms is like what happens in that software when you click add form in the return, right? It's going to give you a list of every form that is possible to be attached to this return. Filed forms shows you what is attached to this return. So these are the forms that are currently attached to the return. These are the forms that are going to send to the IRS or have information that is going to be sent to the IRS, right? So that's sort of what the difference is. So you see we've got a W-2, so let's go add some income. So it carried my W-2 information from the prior year. If it didn't, I would just click add new. So let's add, let's do 35,000 and 3652. The software will also add states based on the W-2. So when we go through and we add Colorado, for example, to this, and we hit save, it may ask us questions about Colorado if Colorado has specific questions. But you can see now Colorado is here, and we go to revisit, and you'll see it's listing automatically as a full year non-resident, because we've already told it we're a resident of the state of Montana. So it knows Colorado would then be a non-resident return. You need to change that, you can. You just select which one you need, come down and hit save. So we're going to jump back to the federal return. We've got our W-2, we've got everything filled out. Let's go add a Schedule C, because I know people are going to want to see this. So we'll type in Schedule C. If you type in Schedule C, you get all the schedules. So here's Schedule C. I have Schedule C information that carried over, which is great. So we're going to come down here. We've got everything here. And just like any other software, I always tell you guys, add the schedule, then add the form. So if you're going to add a 1099 NEC, make sure that you've added this Schedule C first. So we're going to save on this Schedule C. Now, if I want to go to the 1099 NEC, I can do that by going to line 1 and clicking 1099 NEC, or I can go add it from the forms list. It doesn't matter either way. So we'll get in here, we'll click Add New. And let's do. So right here in this reporting section is the key piece, and this is why you have to have the schedule before you add the form, because if you don't, you cannot map it to that form, right? Or map it to that schedule. So the easiest way to do this is to click Pick from List, select the schedule that you want to report this to, and then click Use. That's it, and then hit Save. And now if we go look at our Schedule C under File Forms, you'll see that that amount has already carried over. All right, so the other side is inside here when we start talking about car and truck expenses and depreciation. So car and truck expenses, this all runs off of Form 4562. So when we go to 4562, we're going to click Add New. You want to click Pick from List and link, make sure it's linked to the right Schedule C. And so now you've got a couple of options here. One, we get into property information, which is where you could add in things other than vehicles that you're going to depreciate, computers, printers, things like that. Section B is information about vehicles, and then amortization for those that need that. So right here, if you click yes, yes, and then click Add New, you can enter. Now, there has been some confusion, and it's been brought to my attention over the last couple of years. So I always try to bring this up in training. The date placed in service is not January 1st of 2021. The date placed in service is the day that they first used this vehicle for business. So if they bought this truck in 2018 and used it May 3rd of 2018, it was the first day they used it for business, then this date placed in service should be May 3rd of 2018, not January 1st of the current year or of the prior tax year. The reason for that, while it's not a huge deal for mileage, it can be a huge deal for depreciation. Massively huge deal for depreciation. Okay, so total business miles, we're just going to say 2,600 miles. And then we're going to answer the questions. And so you can see it calculates out the standard mileage. So now you have an option. You can go to actual expenses. You still see the standard mileage amount. So now you know, it gives you a better opportunity to see, well, the standard mileage rate, if I add these up, the standard mileage rate is 1,456, but the gasoline and stuff was 2,500. So if we do that, well, then we know we should probably take actual expenses versus standard mileage. In this case, we're just going to take the standard mileage and move on. In the property section, we've added this new section. So this is where you're going to add any of those property. Click this little help me button. This will help you. Okay, so if you're looking for specific things, right? Let's say computer software. Then we can select computer software. We can click apply and close, and it will fill out this bottom section for you. That is new for you guys that are renewed. That's why I came here. So we'll put this out. We're going to do simple text software, and let's say 21, I guess. And then you have to put in the cost basis, right? Business use. And then we're going to save. So that process should get significantly easier for you guys in how this stuff is calculated. So then we just come back down here and we save, right? So we've got all of this done. So looking at this, right, I've got everything I need. I entered the dependent information. I did the Schedule C. I've got my NEC reported, my W-2 reported. So what am I missing? So let's hit verify. And let's see. Okay, so we've got quite a bit of stuff that we need to go through, right? So let's start at the bottom. So this is Form QBI. So you're going to click where it says click here to fix. Well, let's start at the very bottom. This wants us to verify the, we need to edit the entry because it carried over from last year. So we're going to do click here to fix. And this dependent here needs to be edited. So we need to go in and save on this. Need to go answer that dependent marketplace question. All right, so let's go back to verify. So now we've got the QBI. So let's go ahead and do QBI. We're going to do click here to fix. Oh, I wasn't on the Schedule C, so it threw me out. Huh. I'm wondering if this form is active. So it may not be. So if you get to the QBI, this is actually really easy to do. You're going to click Add New. You're going to do Pick from List again. Select that Schedule C. Click Use. If it's a specified trade or business, you check that box. Otherwise, leave it unchecked. I'm going to check it because it is. And so if you need to attach documents, we do give you the ability to do that, but it is not required. Like I want to make sure that really clear. It is supplementary information. It will not enter any information into the return itself. It's just a PDF copy that gets sent physically with the return. So that's, again, generally not required. And honestly, it's not at the top of things that I would recommend you do unless you know that you're going to need to do it, right? So let's hit verify again. All right, so Schedule 8812 says you're eligible to get child tax, other dependent credit. You may enter advanced child tax payment that you received in 2021. So let's click here to fix, and this is it. So you want to enter the total amount right here, and it's telling you. You can go to this portal. There's a link right here for us to find out. In this case, I had one dependent. So let's say I got 1,800 because the other one didn't calculate. So we save. All right, now we're going to verify again. All right, so this one is very common. You're going to probably get this on basically every return that has EIC. This is just telling you that you can use your 2019 earned income. We're not going to. We know it doesn't qualify, so I'm going to do click here to fix. Why is it not taking me there? Yeah, it's because we're not live. I apologize. I'll get us to the right form. EIC. Here it is. Prior year election income. If you're going to take it, then you go ahead and put in the 2019 earned income. If you're not, just come to this page and click save. That's all you have to do. And when we go to verify, you'll see it's gone. Right? So let's get to the recovery rebate credit. So we'll click here. We're going to say, yes, they received the full. We'll just hit save. If it's no, then you're going to enter the amount that you need to, that they did receive, and then it will calculate from there. We're going to say yes. We're going to hit verify again. I'm going to save the 8867 for last. So let's go look at the additional information. And this is a very important thing. This will help you guys stay compliant with the IRS in terms of identity verification for your taxpayers. So we're going to say, yes, they have a state ID. We're going to choose the state. So someone asked, if you leave a page without clicking save, will that information be deleted? Yes. Save is your lifeline. You want to hit save on that page, because if you don't hit save on that page, the software assumes that you don't want to save that information. It's that simple. So we'll enter an issue date on our ID here. Let's just say it was 2016. Doesn't really matter. All right. So you got their ID information. If they're doing a bank product, this is great because this will actually will carry over to the bank application. On the taxpayer identity verification, if you're doing it in person, then you answer yes to in person, and then you check the boxes to make sure that you have verified that their photo ID is valid and that it is of them, right? That's what you want to do. If you're doing it remotely, same thing. You're going to answer yes and then check the questions. In this case, we're doing it in person, so we're going to leave that unchecked. The schedule LEP, for anybody who wasn't part of my training last year, schedule LEP is basically a poll question from the IRS to determine what languages besides English they need to translate written communications from the IRS into. So I would say this: if your client base speaks anything other than English or Spanish, then I would probably answer yes to this question and select the language. But otherwise, you can just click no. It's not changing anything on the return. It has no impact. So let's say verify again. All right, so now we need to do the due diligence. So we're going to click here to fix, and we're going to click add new. You'll see it calculates those credit check boxes at the top. So in this return, I have EIC, CTC, and head of household. So you want to answer those questions as best you can. We gray out questions that you don't need to answer. So if you get a question in here and you can't click yes or no on it, it's because you're not supposed to be clicking yes or no. Now, question 5 comes with an attachment, okay? Now, question 5 is about, did you satisfy the record retention requirement? Meaning, what documents did you use and keep to determine their qualification for the credits above? So when you answer yes, you want to click attach explanation. And then generally, this is what I do. Start typing in the documents that you used. That gives you a list then of what documents were used in this, so that if you get audited by the IRS, you can come back, look at this explanation and go, okay, these are the documents that I used, and then go find those documents wherever you're storing documents. If it's in the return in DM docs, it'll be there. If you're using filing cabinets or any other method, then you can know what you're looking for specifically that you used, right? So we're going to answer. So we're going to go back through, answer our questions. Yep. And this may actually be my single most favorite feature inside this software. This is going to keep you guys out of trouble with the IRS without question if you use it appropriately. So this box allows you to type in anything that you asked the taxpayer, anything the taxpayer told you about the dependents. For example, father has full custody. Right? So that's the reason that you can type in anything that you want here. And then if you check this box down here at the bottom, you can generate the worksheet for the taxpayer to sign. And I'm going to show you guys what that looks like when we do the view print, but select who you got it from. We're going to say taxpayer. That was the date that it was received. You want to select who you got the information from, just because, again, for your records, it's a protection. So let's hit save. All right, we're going to hit verify. And then our last thing is the taxpayer PIN information. I'm going to show you guys how to do this. This is the 8879 information that's needed. So your ERO PIN and EFIN should already be set up. And all you're going to do is click auto generate taxpayer PIN. Check the box that says enter by ERO. The signature date will already be there. Click save. Okay, so I'm going to jump into 2020 because in 2021, I'm not capable of completing a payment or marking a return complete or processing the payment information because we're not live, right? This is the tax season has not started yet, right? So I'm going to close this out and we're going to go look at a return in the prior year so that I can show you guys those steps. Let's see. Let's try this one. No, that payment's done. Perfect. This will work. So you'll see now that there's a complete button. And if I click complete button, it'll tell me if I have errors. I'm guessing I don't, but I haven't completed anything. So we'll click complete. So depending on how your office is set up, you may want to adjust this. But for most offices, you want to mark the return complete and you want to mark the return reviewed. Now, if you mark the return complete, you can process the payment, but you cannot transmit the return. So basically marking the return complete unlocks the payment method, and then marking a return reviewed allows you to e-file it. Okay, so let's go save and redirect to manage returns, and we're going to come back out to here. Okay. Now, if you don't mark the return complete, there'll be a link or reviewed. There'll be a link right here so that you don't have to open the return. Again, you can just click it and it says mark return reviewed. So in this case, let me see if I can find one that does not already have the payment ready. Let's look at this one. All right, let's see what we're missing here. Okay. Let's run through this real quick. All right, let's go back through. Perfect. So hit complete. We're going to mark it completed. We're going to mark it reviewed. We're going to do save and redirect. Okay, so now you see that we have a start payment button down here at the bottom. If that is grayed out, it is because the return has not been marked complete. Okay, so once you have finished the return, then you can collect payment. And generally, I will tell you what my process is. And again, you guys will adjust it to your own need. Generally, what I do is I complete the return, upload any supporting documents that I need to, if I haven't already done that in the return, get paid, collect signature, then print, then transmit. That's my process there, right? But again, you guys can do this any way that you want to, but I'm going to warn you on the payment side. Once you tell the software that you got paid, you got paid. So if you haven't gotten money in your hand, don't mark the invoice complete. And I'll show you what I mean. So let's hit start payment, and then you're going to click add new invoice. I have my fee set to be manual entry. So we're just going to set it to 150. If you're using the per form or flat rate billing, that will come up automatically and you'll go straight to this screen where it shows the amount, right? So down here is where you decide whether or not it's a bank product or not, right? Non-banking means they're getting a paper check or direct deposit from the IRS, and banking means that you'll go into the bank application at that point. Because we're in that weird window of time between the end of bank products for the last season and the beginning of bank products for this season, unfortunately, I can't show you the bank application itself, but it does not look any different than what you are used to seeing. All of the information is still the same, okay? So even if I hit banking, if I hit continue, it's going to take me to non-banking because bank products are DOA right now, right? So I generally leave this question where it says, do you want to e-file this return return now? I leave that as no. The reason for that is because I want to go collect signatures. I want to go collect, I want to send the return. There's a couple of steps for me before I transmit. Again, entirely up to you. But when you mark the invoice as completed, one way or another, it is completed, okay? So make sure that you physically have money in your hand, because one of the problems that I've seen with preparers over the years, we run into not a ton of issues, but a couple where you'll mark the return, the invoice is complete, and then the customer goes, "Nah, well, you know what? Never mind. I'd rather do a bank product." If that happens, we can reset the invoice, but you will have to call support for us to reset it. It has to go to one of the engineers to reset. And the reason for that is because payment is the most important thing. We don't want to make sure that you guys are getting paid. And this prevents you from transmitting a return that you have not been paid for. It is impossible to do because you have to tell if you transmit a return that you did not get paid for, it's because you told the system you got paid one way or another. Either you collected a cash payment, right? Or they entered into an agreement with a bank product, one of those two things, and you've entered that information in the software. So at that point, it's kind of on the preparer if they transmit that return and didn't actually get money on it. So we're going to mark this one complete. We're going to hit save. Won't let me finish because my phone number is the same. Let me go back and edit. Phone number, taxpayer phone number cannot be the same as the ERA. All of the softwares and banks have that sort of issue. So we save, we're going to close, go to edit payment. There we go. Edit. So we're going to mark this complete now, should let us through, and you'll see now it's complete, right? The balance due is showing 0. So we're going to go back to manage returns. And now you see we have the transmit button. Now, for those of you who still have prior year returns that need to be e-filed, you can queue those with us now. So you have the option, you can queue it, and then we will send them as soon as the IRS opens up for prior year returns. So I'm going to hit do not transmit because this isn't a real return anyway. So that's sort of the payment process, right? So now I'm going to show you a couple of other things. Let me edit this return real quick because I do have one other thing I need to do. So we have a text message feature built into the software for this year, but it allows one-on-one texting. Group text messages are likely not going to be out until next year. But for now, you have one-on-one texting ability. You just have to make sure that they opt in. There's a checkbox here that says taxpayer opts into receiving text message alerts from this office. Okay. So we're going to opt this customer in. We're going to close this. And now you see I have a text button. So if you don't have a text button here, it's because the taxpayer did not opt in. That is why you cannot see it. So we click text. I can't send text for the prior year because we're in the current year. Again, once we move to the current year, all of the features sort of move to the current year. But inside here is where you would get that. And I can probably go back here and show you. See, Yeah, let's jump back to this just for the texting piece and remote signature. So that's where you can send the text, and the text is prefaced by, when they get the text, it'll say my tax office and then your text. So my tax office is the sort of the name of the all of the customer access things, right? So text messaging will preface with my tax office. The client portal is my tax office. The mobile app is my tax office. So if you kind of get your customers used to seeing my tax office, then they won't have any issues at all. If they reply to that message, it will come back into here, and you'll see it in this view text messages section. You'll have a little alert that shows you. Sliding over to DM Docs. So DM Docs is the document archive or document manager. Document manager is what we call it. So you have the ability, you can either upload documents, and you can decide whether the taxpayer can see those documents in the portal. So if you're scanning them locally or they send them to you via email, you can upload those documents. You can also scan documents. So if you hit scan on here, it will give you the ability. There you go. You can capture. At that point, there's a document camera that we recommend. It's from Ziggy IPEVO. So if you go to ipevo.com, ipevo.com, the one we recommend is the 4K. I think they changed the name recently, but it's $99. So find the cheapest one on there for $99. That's the one that we recommend using. It lays flat. It works really, really well. High quality, no potato image. It's a 4K image that looks really clean and really beautiful. So I recommend using that. But again, if you have a flatbed scanner or scanner in your office and you scan things to your computer, that's fine. You can upload them here as well. All right, so my tax office is the next thing. So client portal is in the process. So anybody asking again for the camera, it's IPEVO. It's ipevo.com, and you're looking for the $99 camera. That's the one that you're looking for. So the client portal is in transition. The client portal won't be active until January 1st, is my understanding. So I can't show you guys that, but I do want to recommend to you, there's a series of videos on the client portal, as well as remote signature and the mobile app. All three are on the Simple Tax Support YouTube channel from last year. So go take a look at those before the start of the year. It will really help you. I'm going to show you briefly the remote signature. So if you go to my tax office, as you see right now, I only have the option for remote signature. There's no client portal option at the moment. And if you see here, my tax office is off for 2020. We're in that transition window, unfortunately. So do send remote link. And this is what you do when you send it. You type in their email address, you type in their phone number. It's going to pull what's on the return. But if that needs to be different, that's fine. So two things with this. One is there's one link for both taxpayer and spouse. So currently there's no way to split those. It's something we're looking into, but we haven't got there yet. So let's put in my Google number here. Oops. Oh, actually, you know what? I'm going to send it via email. The email and text message process really isn't any different. So let's do send link via email. Now the link is valid for 30 minutes. So if they don't get to sign it within that 30-minute window, then that time is going to expire. And you just come back in and you hit resend link. So we're going to do send link. You see it was successfully sent. Give me 1 second here. I just want to pull that up. So this is what it looks like. And on their phone, it will look exactly the same. I just need to get the information for this taxpayer because I don't know. Okay, it was simple tax support. And the date of birth was 1/10/83. Oh, does it? Is it not the right social? Oh, I did 555. So it'll start generating the return. And essentially, this is a pared down version of the client portal. The client portal will look very similar to this. It will just have a few more options on this left-hand side. So you can see they can view anything on the return. They can view the personal information sheet, the QBI calculations, whatever they need to look at. Where is that line? I think it's here. Yeah. So this is that form that I was telling you before, where if they enter that information at the bottom of the 8867, it generates that form for them to sign. This is it right here. And it says, by signing below, you verify that the above information was provided by you and is true and accurate to the best of your knowledge. And then they sign. So once they have reviewed the documents, is it not live? Yeah, it's not live. Let me see. I don't think it's live because I can't mark the return complete. Dang. I was hoping. Yeah, it's not. Let me see if there's, oh, wrong one. Let me see if there's a way around it. Yeah, that's what I thought. Okay. It's not live at the moment, which I'm not surprised. Again, we're in that kind of weird window. But that's how you send it. And again, those things are up on the portal. So when they come in here, basically what will happen is right here. See, I've got a notification return review requested from preparer, but I can't actually click on it because it's not active. So what'll happen in here is there'll be a box here that they check that says that they've reviewed the return, and then it will take them through the signature process. It'll ask them, do you want to electronically sign your documents? And then it bounces them over to this page where they can actually sign with their mouse, or if they're on their phone, they can use their finger. Again, if you go look at the Simple Tax Support website with the, there's a whole section in there about those things, where it talks specifically about the remote signature, the client portal, and the mobile app. Okay. In the signature section, you can use your mouse. They can use their mouse. They can use your mouse. I don't have a primary signature date. 1/2/2022. Oh, let me do that. Okay. So they can use the mouse. It also supports 2 other Topaz signature pads. Most of you guys, I think if you have signature pads, you've been using that TS460. That is one of them. Let me show you where that is. It's under setup and then sign pad. And these are the 2 models. So you want to make sure that you come in here and you capture prepare signatures. And then you want to do firm signature. And save. So that's one of the setup things if you're using the signature pad that you want to do early. On the bank side, the other thing that you guys want to make sure that you do is you come in and enroll with the audit protection. So go bank, audit protection, save and continue, audit group, save and continue, and then put your markup and if you want to default it. That's just that last little bit that while I was in here. So let's go back to clients. Let's go back to this client. So we captured the signature, right? Now we need to print. So we can go view print. Anything in print right now is going to be what we call pre-production, and they'll all be watermarked with pre-production. Once we go live, those things will go away. So here's where you can select. So let's start with the preparer copy. So we're going to do the preparer copy. And now you have a couple of options. You can do signature forms only, which is going to be any form that requires a signature is going to get saved. That's the most common use. And if they signed digitally, which means they either use the signature pad or the mouse, or they use remote signature, the mobile app, or the client portal to sign, what you can do is this. You don't actually have to print your copy unless you want to. What you can do is select prepare copy, signature forms only if you choose to, and then click export to document manager. Okay, what that's going to do is that's going to move it over to DM Docs. So your copy will all be over here in DM Docs. So if we go look at this now, oops, the print button's currently disabled, but if we go look at it, now I've got the whole return and everything is signed. Prepare signature, taxpayer signature. And we go down, we go look at the 8879, you'll see the ERO signature is there as well. So long return. Where are you at? And here you go. So there's the ERO signature as well, right? So all the signatures are saved in your copy, which is in the DM Docs window. So you have no issues there. All right, so in this view print window, now if you want to send the customer copy, you can do clear all, or you can do select all, whichever you want to do. Now you got a couple of options here. If you want to do the customer copy, again, you can select whatever you want here, and you can either print the selected forms. If I hit print, you'll see it's going to show, it's going to open in a PDF, and you can see everything, and their return will be signed just like yours. So they get a signed copy as well. The other option that you have is you can email the customer, and you click that link to email customer copy. You can enter the email address and you can send it. And I'm going to show you guys, I sent it to the support mailbox, but I'm going to show you guys what that looks like because it is already encrypted. So the email is already encrypted. Let me open this up. I'm going to drag this over here so we can take a look at it. The email is encrypted already, right? The PDF. So it's going to show you, it's going to send this out to you. But down here at the bottom is where it's telling you the instructions for opening the attached PDF. And it gives you examples. What I would do if I was you guys is sort of remember this so that if your customer calls you, you can tell them what the password is over the phone. The IRS says that all PDF copies of returns sent to a taxpayer must be encrypted. They must be password protected, and you must provide the password to them in some other method than the same way. For example, we cannot put the password for the PDF in the email that has the PDF attached, right? So instead, we gave them instructions on how the password was created so that they could figure out what the password is themselves, right? But if they're not able to do that, you can look at this sections in the instructions and you can figure out what it is, and you can either text it to them or you can give it to them over the phone if they call you if they're still struggling. So that's the key piece to this that I wanted to show you guys, is that stuff there. All right. So now we're done, right? And for us, the next step would then be transmitting the return, which I showed you. So when you hit transmit in 2020, that is what it is. Right now, we can't mark the return complete Oh, oh, I guess we can. How did that happen? Uh-oh. Okay, I need to point that out. Don't mark returns complete right now, regardless of what you see in here. Because in theory, we can actually start payment. Yeah. It won't let me finish because it's not actually ready and live. About what I expected. So that's sort of the overview of everything kind of inside this software. Um, the other piece is, depending again how your office is set up, there is a manage returns or a client manager. There is a status list, so you can change this, right? And this is ready to review, and I can put in a date. It says, okay, this was ready to review on 12/25. So if you're the person reviewing returns, when you go to clients, you can change the return stages to whatever you want, right? Reviewing, ready to review. Okay, so now I've got it. And I, as the person who's checking this, can now change this to reviewing. And I can put in the date as well. And I like putting in the date in that field because it gives a history. Now, it's still time and date stamped on this side anyway, but you can also put in your name, depending on what you want to do. You do have to put a comment in there, but you'll see the status is set to return reviewing by, and then who's actually reviewing it. And when it's ready, that's the person who can transmit that return at that point. So the very, very last thing that I'm going to point out on this client manager screen is this cool little button right here that says file prior year return. This will allow you to push the return data back to the prior year. So for example, if we click, this won't work for this client because he already exists in the prior year. Let's see if I can change this. Let's try changing the social and see if it'll work. So you see, now we've been able to push this back to the prior year. If we hit save here, I'll show you how I know. If we go look at the 1040, you'll see that this is a 2020 return, not a 2021 return. So we are able to push this return data back to the prior year. Now, if we close, it's going to take me back to the current year. Now, if you use that file prior year, I want to show you guys what it'll look like. So if I come back in here, see, it's not here, right? It's not here. It doesn't exist here. So if you use the file prior year return link, you will have to use it from here, and you got to do edit view return and process it from here. The last little thing I want to show you, if I can, and I don't know that I can, let me see. I'm going to mark this paper file. If you mark a return paper file, then you should get the option to file an amended return. That's what I wanted to show you. So you can click this link. If you need to file an amendment on a return, just click file amended return. Obviously, if the return has been transmitted, then it won't be eligible for amend, right? So that's how that particular piece works. All right, so I think I'm done. We got done a little bit early, which is great. Does anybody have any questions at all? Again, feel free to unmute yourself, or just ask in the chat if you're more comfortable there. Is there anything I didn't show you that you feel like you need to see? Or am I just the greatest trader of all time? Okay, someone wanted to take a look at interview mode. No problem. So let's go take a look at interview mode, and then I'll get to the next question. So if we go here, and if I go to edit, I can switch over to interview mode. So interview mode starts like this, and then you just save and continue. And it takes you right into interview mode. And it is very much interview based, right? What's the filing status? Save and continue. Special exemption for spouse. Were you married? Yes, no, whatever the case is. And it's very save and continue all the way through. My advice is for more experienced preparers, I think they'll struggle in interview mode. Less experienced preparers, it's a good way for them to gain information because there's a ton of little help icons like this one that will direct you either to the IRS or they can use this useful information. But like, even if we go to filing status, see, here's some help that will tell them what the tax rates are, things like that. It'll also take them again to the IRS site where they can use the ITA tool and actually the interactive tax assistant. So that's how that works. And then again, we talk about return attachments and things like that. Someone wanted to know where we create logins. So I'll show you again. Go to quick account setup and right here. And you create at this point, you would click add new preparer. If you had that option, I don't in this year. Let me jump to the prior year. Quick account setup. Oh, I don't have the ability to add preparers. I think I have too many. By default, it's set to 3 preparers. If you need more than that, talk to your account rep. But that's where you do it. You do quick account setup, and then you'll have add new preparer if you're able to. And someone asked, how does it work if you have more than 2 employees? So let's be clear. This has been one of the problems, I think, in that Simple Text 1040 software for a number of years. You cannot all log in with the same login. Every person needs to have their own login. Everyone who touches a tax return or logs into the software needs to have their own login. Now, if they're just data entry people, they don't have to have a PTIN. And I'll show you in this screen here. At that point, you would select their prepare designate, or is this the admin? I think this is the admin account. Right here under prepare type, you would select them as data entry only. And then that removes the PTIN requirement. Look, let me tell you what'll happen if you log into the software with 2 people using the same software. Whoever logged in last is going to stay logged in. The person who was already logged in is going to get kicked out of the software, and it will kick them all the way back out to the login screen. So be sure that every person who accesses the software has their own login. Like I said, the minimum is 3 or 4. And then if you need more than that, if you come in here and you go to quick account setup and it won't let you add new prepare, contact your account manager, because either you're over your cap or somebody in support, we may have missed the request to increase the number. My understanding is you get them in blocks of 5. But again, talk to your Simple Text sales rep about that specifically. Any other questions? Okay, so first question was about EFIN summary verification. So let's go through that real quick because we are going to get that question quite a bit. And I'll show you what you guys need to do. So when you come in, you can do it from the quick account setup as well. It's under firm setup. You go to EFIN status summary. Takes you to the same place. What you're going to do, and there are instructions here as well. You're going to log into eServices, and what you're looking for is the application summary page. Click print, save that as a PDF, and there's a tracking number right up here. You're going to enter that tracking number right here, and then upload the PDF of that file, of that print, and then click upload and save. Now, once you've done the upload and save, it'll get sent over to the IRS. They're going to verify that the EFIN is active. We do this ahead of time primarily to make sure that you guys know, hey, my EFIN is not active. If for whatever reason the IRS sends it back saying it's not active, that way you can go get it. Someone asked, would we have a copy? No, we would not have a copy of your EFIN status summary. You need to go to the IRS website to e-services, log in and get that. Get it directly from there, because even if we had a copy, your EFIN may not be active today just because it was active a year ago or 2 years ago. As far as subsites go, there aren't subsites in this software. Every preparer has access to their own returns unless you give them access to all returns. So the only sub sites that would be in here is if you had multiple EFINs with SimpleTax. If you have questions about that specifically, I would get with your account manager. They should be able to explain a little bit more about it. So this is why I'm getting that message, is because I have not done this myself. All right, are there any other questions? Okay. If you have any questions, something comes up, you can always contact support, or you can rewatch this video when it gets put up to the SimpleTax support YouTube channel. If you're not currently subscribing, I recommend that you do. The reason for that is because we add videos to there whenever we can. So you may get, if you subscribe and get notifications, you'll get an alert when we post something new. We don't post a ton of stuff, so we're not going to be burying you in notifications. But when we do post videos to the YouTube channel, they're usually pretty important and pretty good information for you guys to have. So that will conclude our webinar for today. Like I said, if you guys have questions, please feel free to reach out to support or to your account reps. They should be able to either answer your questions or find the answers to your questions. And I want to thank everybody for their time today. I truly appreciate your time. We know that it's valuable, and we appreciate your business as well. So I bid everyone a great day. Happy holidays to those that I don't speak to before Christmas. Stay tuned next week. There'll be an email going out about support hours for the Christmas week, for New Year's week, as well as into January, so that you guys know when support's going to be open and when we'll be closed. All right. All right. You guys have a wonderful day. Thanks for joining. Bye-bye.